I'm Alison Blanchett and welcome to the Smart Biz Basics course. This is a course that I have designed for small to medium business people, whether you're in a business already or whether you are setting up a new business. So tonight is the really exciting topic of how do I pay less tax? So, who's got an existing business at the moment? Yeah, that's okay, just raise. New businesses? One, excellent. Couple, good, fine. So I'm going to put here the word expenses. Expenses are items that you will spend money on that go against your income to reduce your profit, which profit is what you pay tax on. The problem is that not every industry or business is the same. There are some expenses that some businesses can claim that other businesses cannot. So there is no rule book, there is no guide on what you can claim against your income. There's some generalised expenses, but there are many different types. For example, if you are a professional rugby player, you can claim going to the physio, the chiropractor, the gym, liniment, bandages, all against your income. However, if you're an insurance agent, you cannot. That kind of explains that. Right, so I'm just going to ask if anyone thinks what expenses they know of that they could claim. Just shout them out.
University costs.
Oh, goodness, that's the first time I've had that one first. University costs. I'll put training there. Now that only can apply if you earn income in the same year that you are doing your training. So for example, if you are training in a particular field, so say I was training to be an accountant, which I did, just in case you were worried. Yeah, so I trained to be an accountant, but I trained before I went into business as an accountant. So therefore, all of the costs of me training to be an accountant, I cannot claim against my income because I became self-employed after the fact. So if you are training in a particular industry which you are going to be self-employed in, you can only claim those costs as long as you earn income in the same year that those costs were incurred. I'll give you another one. Home office costs. If you are running a business, you can claim for having an office at home. It doesn't have to be a separate room anymore, it can just be a designated area in the house. It can be storage, so it could be an area in the attic or the basement or part of your garage or a separate storage shed. You calculate the area that in relation to the actual total home area. So if you've got some room in the garage and the house that you're using for your business, then you need to count the area of both of those larger structures and then measure the areas that you're using for business and offset one against the other. So for this here, it will be business use area divided by total. Does that make sense? Yeah. And then, so it might end up being 10% or 20% of your total home area. Once you've worked out what percentage of the home area you are using, that's the percentage you can claim against things like power, mortgage interest.
So all the home related sort of costs are based on that?
Yes,
area,
absolutely.
on that percentage?
Yes, they are. Absolutely.
You can't up the percentage because you figure you use more of the power for your business than
you can. Absolutely. So if you feel that you use more power for your business because you're running machines all the time or or anything, then absolutely you can increase the power usage. It would just be looking at the power, trying to guess the power usage, or if you have one of those meters at home that can work that out.
Fairly fair and
Yeah,
representative.
absolutely.
Sure.
Yeah. So power mortgage interest rates. Rent, if you're renting, there's a percentage of that. Phone is a bit different.
What about insurance on that?
Yes, yeah, only house insurance. Contents insurance is not included. And that just brings me to a little aside. If you are using a computer at home and something happens to it, you pour water on it while you're watering the plant above the computer, or you pour coffee on your laptop for whatever reason, you cannot tell the insurance, well, if you tell the insurance company, put that a different way, if you tell the insurance company it's a business asset, it won't be covered under your contents policy. You actually have to have business assets covered by a business insurance policy.
Can I ask about body corporate fees?
Yes,
That would fit under that as
yeah,
well?
yeah,
Great.
if you're paying them.
Yeah.
And that comes to another point about insurance on a vehicle as well. If you are using your vehicle for business and it's not insured as a business vehicle, if you have an accident whilst doing business, there could be an issue if you're claiming for insurance through that.
So how do you get around that? Do you just not claim your vehicle insurance?
Oh, absolutely. You claim your insurance on.
Sorry, not your insurance. Your costs, your vehicle costs, or do you just have to make a moral judgment?
Moral judgment's probably fine.
Good.
Yeah, yeah, that's a really good way of putting it. For phone, you pay a rental charge on your home phone, and I know it's quite difficult now with the telephone bills when they come in, because it all seems to be lumped into one big package. It's one amount for phone rental and internet usage and so many free calls or whatever package you've got. So it's probably just easier just to claim 50% of the whole phone bill at home, just depending what you're using. If your Sky is on the phone bill, you're not really allowed to claim Sky. But if you are in the business of making television programs and that, then you could claim your Sky costs. So that's where it's a bit different. I had a client who used to do fashion design, so she claimed a portion of her Sky TV because that's when they had the fashion channel. So that was okay. We have clients who need weather, for example, up-to-date weather all the time, so they claim a portion of their Sky bill for the weather channel.
And that would include internet within that as well?
Yeah, and internet I put as 100%.
Oh, okay. How come? Just because you can?
Yeah.
When in regards, like, if there are network issues, I know if your phone line is completely under a business line, then essentially it's up to you to recoup any losses through your insurance.
Yes.
In the instance where it's a home line and a business line, and you have line issues, do you know where that falls in
It
regards to
depends.
responsibility of the provider? Or?
So if you've got a phone number
Mm.
and it's used for business and personal is what you're saying,
Mm.
I would classify that as personal. If you had a business package with your phone company, then it would be a business insurance type issue. But if it's just a home phone and it's under a personal package, then it would be under a personal insurance issue.
So I guess it depends on what like if you're heavily reliant on phone use for business and you incur losses through the line being down or something, then you're probably better still to claim your insurance rather than
Yeah,
trying to get...
that's right. Yeah, just see what you can do there.
No, just a point of interest.
Yeah, well, you need internet to access your banking records,
Yeah.
to research things for your business. A lot of the time I spend on the internet is mainly researching for my business. really. I mean, even if I'm looking at other things, it gives me marketing ideas, different websites, how they're placed, how things are placed on those websites. Yeah.
So with cell phone, is it
Yeah, I would claim.
100%?
Again, when your cell phone bill and you had your calls itemised on it, you had to work out what were business calls and what were personal calls. But now with the 200 free minutes and so many free texts, you can't, because they don't list the numbers anymore on the phone bill. So it's I would say if you have a mobile phone and you're in business, it's 100% use, because you are using it for business purposes, really. If you only had a mobile phone and no home phone at all, then it would IRD would say that you need to apportion that, because obviously you've got a phone for private use. Some people only have a cell phone. Leave that one up to you to decide where you want to go with that. So that part forms the home office, and that's really important to be able to claim for that, because a lot of people miss that, and it can work out to be a reasonable amount against your income. So it's worth doing.
Transport.
Yes, transport. Okay, so with transport, the vehicle or bike that you are using, I'm not talking a push bike, I'm talking a motorbike. That with the transport, it's keeping a logbook of your business use versus your personal use.
So it can still be personally owned, but you can claim it as
Absolutely.
business.
Yeah.
Right.
Personally owned. If you're a limited company and you want to claim for a vehicle, you can do the same thing, just own the vehicle personally and keep a logbook for the business and personal use. Or you can claim, the company can claim the entire amount of the vehicle costs, as long as the vehicle is owned in the company name, and you need to sign write the vehicle. But you have to keep a record of when that vehicle is available for personal use. So it's not when you use it personally, it's when it's available to be used personally, because that is a personal day. So if it's a personal day, then you have to calculate fringe benefit tax on that, which is a complicated calculation. I'm not going to go into that right now. Accountants, we know how to do that, so just see an accountant over that one.
Generally speaking, it's more sensible just for it to be a work vehicle?
Yes,
as
it
such?
is. So there is, if you have a limited company and you have a vehicle, there is a work-related vehicle description, which means it can have can be a van but no back seats, can be a single cab ute, that's fine, completely work-related vehicle, because you can't really take passengers. So courier vans, okay. For a double cab ute, then we have an issue with that personal day available for private use.
So if I was to buy a courier van, for instance, before actually having set up my business, will I still be able to claim back to that
Yes,
afterwards?
yes,
Okay.
because you've bought a courier van for your business.
Yeah.
You needed to have that before you could start.
Yeah, but with the financial year coming up.
Oh, no, that's fine.
So that's
Yeah.
still okay?
Still okay,
Cool.
still okay.
Okay, so if you haven't, I don't know, we'll get to that later, I'm sure, about exactly how you go through the nuts and bolts of starting up your business.
Yes, I will, yep.
But so you can make purchases like computers and things like that
Oh, absolutely, before you start.
before, and they can still be tax deductible.
Yes, as long as it's not years in advance. So, it could, within, I guess, 6 to 12 months, if you've been
Okay.
accumulating assets along the way, because you know you're going to set this business up and you just want to have everything ready,
Yeah.
keep all the receipts for those things, and then you can put those in.
Does that incorporate running costs in general? Like, I mean, things like fuel,
Yeah,
maintenance
yeah.
as well?
Courier van, 100% tax deductible, no issue.
Cool.
Yeah. And if you've got a transport option and it's pretty much mostly business, then I would suggest getting a fuel card, so that you just get one statement each month for your costs, rather than keeping all of the FPOS receipts. It's a lot easier to manage. You lose
If
those
it's
other
dual
receipts.
use, so it's a little bit private and business.
Yep.
How is there a
Magic
specific
number?
formula to work out what percentage you can claim?
You keep the logbook for 3 months.
Yep.
The vehicle logbook, and over that 3 month period you have your start speedo reading, and then every time you go out in that vehicle for business you log the kilometres you've travelled. It's painful,
Yeah.
but I have found a cell phone app that you can do that with, rather than you can actually keep the logbook on your cell phone if you've got a smartphone, so that's quite handy. There is an exemption if you're on 24-hour on call, your business or type of businesses, and therefore you can be parked anywhere because you're 24-hour on call, but IAD kind of has an indication of what types of businesses will be a 24-hour on call type operation. So just be aware of that. They've also stopped the idea of having those magnetic signs that you can put on your vehicle and then pull off in the weekends. That's gone. Yeah.
Does that include dangerous goods, do you know?
Pardon?
Same thing. Dangerous goods require you to have magnetic signs either
Oh.
into your vehicle. That's
Oh no, that's okay, because that's
So-
a particular sign. But people were having their business sign written on a magnetic sign and sticking it on the vehicle,
Okay, yeah,
and then
sorry.
pulling the magnetic sign off so you could drive around anonymously in the weekend.
right.
So that's illegal now, is it?
Oh, it's not illegal. It's just you're not allowed. They won't let you claim it as sign writing.
Oh, okay.
Is like is if you had an employee and part of their I guess contract was or salary was that they had vehicle use,
Yes.
where does that fit in for say weekend use?
You can write them a letter to tell them that this vehicle is not available for private use on the weekends, unless they're on call. And if they do private running around and it's found out, well, on their head be it. But
It's not the sort of thing where it can be a perk in regards.
it can be a perk, but your business would pay fringe benefit tax on that.
Fringe benefit tax.
Yeah.
Okay, right. So that's
Yep. So you can give your staff a work vehicle,
yeah.
and if it's not a work-related vehicle, so it's not the single cab ute or the van with no seats, then you can do that.
Yeah.
But you have to pay a fringe benefit tax on that.
Right. Yeah.
Is that hefty?
It depends on the level of salary that the that the staff member is earning, and it depends on how many private days versus business days. So the calculation is not straightforward, but it's a cost. I mean, the cost is tax deductible to your business, so it comes off your income. So and you can claim GST on that as well. It's just another cost to factor in if you're giving that kind of perk to somebody. So logbook, sorry, just getting back to your question about the logbook, because I didn't quite finish that. 3 months, and at the end of 3 months you put the end speedo reading in, and then you work out the total kilometres travelled, and that's divided by the total business Ks, and that gives you your percentage to claim.
Right, so vehicle costs over that 3 months, no?
And
It stands forever until you change. Well, you're supposed to renew it every 3 years, but if you're not changing your vehicle use within every 3 years, it's still the same, then you just use the same percentage. So you just have to keep the logbook for 3 months and keep that for 7 years, so that IAD ever wanted to look to say, yes, you've gone to the trouble of doing that, absolutely fine. If you don't keep a logbook, you get to claim 25% of your total vehicle costs regardless.
Oh, right.
So no logbook, 25%, no questions asked.
Regardless of what the business is and what you're doing.
Yes.
Yeah.
So that might be okay for a start.
Yeah.
Might be better overall.
Yeah, depending on what your usage is. If you're doing a lot of travelling, or you don't have to keep a logbook, Josh, that's all right. But if you're doing a lot of travelling, it would pay to keep the logbook, because your cost could be 80% business use, and so then it is worth it. And that's the percentage is claimable on all vehicle costs, so rego, warrant, insurance, repairs, fuel, whatever, everything relating to that vehicle. You don't have to keep another logbook if you change your vehicle. It's all about the business usage of the vehicle. Now, there was a question one year about bicycles, and people asked if I'm biking, can I claim for food, because that's my fuel. And unfortunately there was a case in Wellington where they had bike couriers around Wellington, and they wanted to claim their food, and it was ruled that they could not. in case anybody was planning on biking.
Interesting though, but
Yeah, there we go.
That's just something in my mind. I was thinking about training costs. So I go off somewhere up in North Island for 3 days to do a course.
Yes,
I can claim the travel costs associated with that, the
Yep.
accommodation costs associated with that. What about the food costs associated with that?
yes, you may.
So in that instance, food costs can be claimed,
Yes,
even though I have to eat at home anyway.
yes, because you're away from home. So if you're travelling away from work out of the district, then you can claim for your travel. So if you're flying overseas or if you're flying nationally, you can claim those costs, you can claim your accommodation, and you can claim the food. If you are claiming or taking somebody else out for dinner whilst you're away, I'm not meaning anything untoward with that comment. Another business colleague that you're taking out for dinner whilst you're away, it becomes entertainment.
Hopefully.
You can take that any way you like.
Alcohol costs,
Yeah. Yes,
so that's okay.
absolutely.
Wow.
You can drink a lot while you're away. It's not a problem. It's all claimable.
You just may not remember.
Yeah, well, that's true. Entertainment's only 50% claimable or 50% deductible. And that is if you're taking somebody else out for dinner, a colleague, a client, you're paying for the whole meal experience, everything. That is only 50%.
so that's in the same instance. You go down to the pub, you buy your staff a round of drinks,
Yeah.
50%.
Yeah, even shouting the staff around of drinks is 50%.
Same with meals for
Yeah,
over-
buying drinks and having them on the premises is 100% claimable. Not sure the difference there, but yeah, that's fine.
Okay. And things like overnight expenses for staff of food and whatnot.
Yep,
Is that,
while they're away,
is
yep.
that 50% as well?
No,
Or
if
that's
you-
the-
if-
that's the entire.
Yeah.
Right.
That's entire. So if you're paying for staff to be out of town on work, then absolutely all their costs are tax deductible or offset against your income.
Yeah.
That's fine.
But on those costs that we just covered for travel,
Yes.
if it was related, so say I was to go to Hanmer and do a wedding, and
Oh,
I
yeah.
had accommodation costs there, I'd have to be mindful of, I might have factored into the cost of charging the client.
That's okay. That's fine. Because when you've on charge the client, that's going to be your total income for that,
Oh, yeah, yeah.
that weekend. You still need to claim the cost that you're paying for to offset that. Yeah, so that's fine.
Do those costs, when you're paying for them, do they have to go through your business account?
It does help. It does help.
So that's easier for claiming for through IRD for your, okay.
As an
So-
accountant, it's really good if you try and keep all of your business expenses in one account. If you keep putting them in different accounts and then bring these receipts in at the end of the year in a plastic bag,
Yeah.
I will be grumpy.
But you could put it all through a business account,
Business account would be a good idea.
but I could
Can be
buffer that from
yeah.
my own personal account. Okay,
Absolutely,
I'm running short,
yeah.
I'll throw
Yeah.
$500,000 in there.
So money that you fantastic money that you put into your business account that's not income
Yep.
is still not income. It's
Cool.
just money that is owed back to you at
Okay.
a later date. So
Fine.
it's never going to be included as income.
Yep.
It's just a lot easier to have the business account running
Right.
with the business expenses.
Yep.
so using one EFTPOS card or one credit card or whatever.
Yeah, absolutely.
Facility for
Yeah.
business.
Yep, much better, much easier to keep a record of them. Mm. So is everyone okay with entertainment? I'm great
Absolutely.
with entertainment.
Yeah.
But you can kind of see, you're probably thinking about your own businesses now and going, oh, well, I can claim certain things here, and then another person might think, oh, I don't know if I can actually claim too much in that area. So if I may use you as an example, as a marriage celebrant, or not just a celebrant, funerals, just giving you a wee plug there.
Thank you. Thank you, Alison. Pay you later.
Funerals, baby namings, anything. This is your lady.
Don't lie just yet.
No. She can claim makeup
Oh, we'd need a lot.
because you have to look the part for being up the front conducting the ceremony. You can claim the odd outfit because of the particular event. So that's something different. Let's say you count as a courier driver, no makeup for you.
He
So.
could claim clothing though, possibly.
Sorry?
He could possibly claim on clothing.
Yeah, if you have a uniform,
Yeah,
yeah, so that's fine. Clothing is an interesting one. Can I touch on that now? Clothing. So protective clothing. Protective clothing is just fine. Completely business related. It's not an issue. Steel cap boots, overalls, hard hat, no issue. Scientist, if you're a scientist and you have to have the white coat or whatever, that's fine. So there's no issue with protective clothing. Other clothing, like I'm wearing this outfit tonight, I can't claim this as a business expense. I might now because this is probably going on YouTube, but I can't normally because it doesn't have my name embroidered all over me, because that's my name of my business. My business name is not embroidered, and quite rightly I wouldn't want my business name embroidered over this dress anyway. So you can only really claim your business clothing if the name is embroidered on the clothing, except if you've got a standard uniform and it's screen printed on. I'm just thinking with the courier.
Is that,
Sorry.
sorry.
You're right, you go.
Like, do you only need, say, a blazer that would have the logo or
Yes,
something on,
that's
and
fine,
the
that's
rest
fine.
is still
Not
claimable?
claimable.
Not
No,
claimable.
not
just
claimable.
whatever is branded.
Yeah, it doesn't count if you write your name on your tag at the back like you did
Yeah.
at school. That doesn't count as being embroidered on. Yeah, unfortunately, that's the clothing rule. So I got a uniform for my staff, and it was just a shirt, and I embroidered the name on it. It's marketing. They walk around at lunchtime, and they can see the name, and it works. But I can't claim what they wear on the bottom unless I want to embroider my name across their back or something like that.
Sandwich boards, you know.
Yeah. So that's the issue with clothing. But in the celebrant's case, it's quite different because it's special occasions and you are required at certain times to wear specific outfits. Like if you're conducting a funeral, you'll probably need a suit or some description that you might leave as your funeral celebrant suit, perhaps. You can't just turn up in shorts and a t-shirt, really. Yeah. So that's the difference there. But then under protective clothing, if you're out in the sun all day and you wear a hat, that's fine. Like builders can claim for sunscreen, they can claim for sunglasses because they're protective glasses. I can't claim for prescription glasses even though I can't see a lot when I don't wear them, and that's not very good if I'm doing your taxes, if I can't see. But I can't claim my prescription glasses because they consider that a personal cost. Yeah, it is. Yet a self-employed optometrist could claim the cost of their glasses because they'll be wearing them if they need them, and it's also a selling point because they're wearing what they're selling. So it's a little bit different. So if you're a fashion designer, you would obviously claim for the clothes that you were designing and wearing because you want everyone to see what they look like. So that's the separation why some industries can do some things and others can't.
Talking about protective clothing, like to what extent does that, I'm a beekeeper, so
Oh, yeah,
I need to
you need a
wear
lot of-
protective
yes.
clothing, but it's like, does that extend to a long sleeve shirt underneath overalls?
I
Or-
would say so because
Right.
I'm not sure how much a bee sting
Enough.
penetrates.
Yeah, fair enough.
If
Yeah.
I don't think IRD would complain that you had to
Mm.
wear a long sleeve shirt under your overalls because of the stinging issue.
Mm.
So that would be fine.
Yeah.
If you were required to wear a tie in your job, just out of interest, because I am in my day job, I'm required to wear a tie, it really pisses me off. Can I claim that? Because I wouldn't like
No,
to wear
because-
it anywhere else.
I'm going to ask you the question, in your self-employed job, would you wear a tie?
No way.
Exactly, so you can't claim the tie.
But if I did,
No.
oh,
You could have your business name
That's
embroidered on your tie. I don't know how that would go in your day job. Creative's good. You just got to think outside the square. So I challenge you after today that every time you spend money, could this be a business expense? You just think outside the box.
So like my thought is copy editing and proofreading. That's my bent.
Yeah.
Does that mean any piece of written anything that I purchase, be it a book or a newspaper, is research for?
Absolutely,
Wow, that's amazing. Whole new world.
it is. Yep. People
It's still
who
a cost.
Oh, all right.
depends what you
It's
want to
tax
say.
deductible, but it's still a cost.
She said nothing about the long sleeve shirts before. I've just
Yeah.
That's why I'm here in a t-shirt.
don't see any stings. So
Would it be cheeky to assume that you could charge your water usage at home for cleaning your work vehicle?
Absolutely, that's
So you
not
can do
cheeky.
that.
That's fine.
Cool.
Percentage only though,
Ah, okay.
because you still need water in the house for other things. Yeah, but that's part of that rates thing. So if you have a fleet of vehicles you need to clean at home, then obviously your water usage claim could be higher.
Cleaning costs for home?
For the percentage, yep. One would assume that you need to clean your office every so often. If your office is at home and you see customers at home in your office,
Yeah, I
like,
do, yeah.
it's got to be in a good shape.
Yeah, it's gotta look good.
Tissues will probably be required
Oh,
too.
tissues.
Yeah, so that's tax deductible for you as well. So yeah, cleaning is fine. Also, because your office is at home, tea and coffee for your clients would be claimable.
Right.
So the sort of thing like where it's, providing smoko.
Absolutely,
It's
yep.
claimable, but
Yep.
okay, across the board.
Smoko costs for your staff are claimable.
Yeah.
Advertisement.
Advertising, yes. I'm going to talk a little bit more about advertising marketing in another session because in my mind it's not as straightforward as it used to be. I think you've really got to think very creatively and very much outside the box, and you don't necessarily have to spend a lot of money on marketing and advertising anymore like you used to. So we're going to spend a bit of time on that in the next session. But any form of advertising is fine.
Employees
Tax deductible, yes.
a big expense. I'm just sort of more pondering it from the perspective like you own the business, you employ yourself, or you just
You can.
Where are the kind of pros and cons with that model? Like obviously then you're paying personal
PAYE, yeah.
tax as well.
Okay, so you can only employ yourself if you've got a limited company.
Mhm.
Well, you can do it in a partnership, but you've got to have a contract of service
Yeah.
with your partnership
Mm.
for you. So we'll just talk limited company at the moment. So the limited company in the eyes of the government is a separate entity, so I treat it like a separate person, and that is going to employ you. So you get employed as just like any other employee. You get sick pay, holiday if you wish to take them, hourly rate. ACC is still applicable on that, and your PAYE or your personal taxes paid for by the company. If you don't do that, you may end up having to pay provisional tax or other personal taxes, which I'll touch on in another session about how that whole tax structure works. It really depends on your other personal income or any other personal circumstances. So it's hard for me to say right now without knowing your business, saying yes, this would be a good idea or not. But it's obviously worth a chat.
Yeah.
But it can work really well because it means your tax is paid as you go every month.
I appreciate there's pros and cons of that.
Yeah.
It just would be good to have a little bit more insight and probably, as you say, further discussion.
Yeah, it's from a tax management point of view, it can be really helpful because the wage cost for you as the business owner becomes an expense, so it becomes an employment cost. So that's great. It does reduce the income of the business, so it goes against the income of the business. Your tax is paid as you go. Your KiwiSaver can be paid and tax deductible by the company as well, limited company, so that's another cost. So it's like you're contributing to KiwiSaver and your company is paying for that too. But because you are your company, it's kind of you're doing it yourself, but you get a tax deduction for it. And then it reduces the profit at the end of the day. So the company tax rate currently at this day and age is 28%. The employment cost, employment PAYE can vary depending on, it's a staggered rate. So it depends on what salary you choose to pay yourself.
Are
Yeah.
there any tax breaks for small companies employing other people other than themselves?
As in,
As in just like, you know, just allowances for starting and getting up on your
not
feet?
really.
No?
Not beyond income,
Yeah.
basically saying, hey, we'll give you a bit of money to hire this guy who no one else will hire.
That was a nice way of putting it. You can get a wage subsidy from the government if you employ someone who is currently on a benefit,
Yeah.
but you have to employ them for 6 months.
No.
And you have to keep track of
Keep track of them, employ them for 30 hours or more, I think it is.
training, them doing
Training,
this.
yeah.
And,
There's a lot.
yeah.
Don't go
It's not
there
a
yet.
heavy
You haven't
stuff,
started
it's a bit
yet,
of
so
a
don't
pain.
go there yet.
Yeah.
It's a big rigmarole. Sometimes you can find a good person that way. It just depends.
Hypothetically, you could pay yourself a lot of money.
Hypothetically, you could. But you, bear in mind that my belief, we are in business to make money, correct? Well, that's my belief. I'm in business to make money. I don't want to work for somebody else, so I'm going to work for me, and I need to make money to put food on the table, pay my mortgage, everything else. So I need to make a profit to do that. But I'm also of the mindset that I don't want to pay any more tax than I have to. So I'm all for let's claim as much as we can legally, and also, you know, thinking outside the square. But at the end of the day, I still need to make sure that I'm making money. Because I have some people come to me with a business idea and go, I don't want to make a profit, don't want to pay any tax. And I'm going, well, how are you going to live? You are going to pay tax. Paying tax is an inevitable end to making money. It's how you manage that tax and how you manage those tax payments and how you manage your business. So that some of these things that you pay for privately, like your home office, can be part of the business cost and not your personal cost, which is big. It's really big. And also, if you decide to be employed by your company, then yeah, by all means do so. And if your tax is paid as you go by your company, then you're managing your tax bill and you're still making money. The biggest problem is if you go into business and say, I don't want to pay tax, and then make a profit and you've put no money aside, that's what will kill you. So you must save for tax. So I do strongly believe that. A lot of people will say you do not pay tax in their first year of business. You don't physically pay it, but you'll pay it year 2, and in year 2 you'll probably pay last year's tax and this year's tax in one go. So you'll have 2 lots. So when you start a business, you must save at least 10% of your turnover, I think, from day one.
For a startup business, provisional tax would probably be not a great idea as far as extra expense, or you would recommend it or not?
Provisional tax, as long as you can manage your bookkeeping side and you can be prepared for it,
Yeah.
it's okay. Because provisional tax, if you were on a wage, if your company paid you a salary the same amount every month and paid your tax as you go every month, it would probably be the same as a provisional tax bill. It's just being paid monthly rather than 3 times a year. So by doing it on a monthly basis through PAYE or wages, it's better on your cash flow, is what I'm saying. It could be that. So you're still going to pay a similar amount of tax, it's just how and when you pay it.
Just primary industry.
Yeah.
You know, it's your income usually comes in one kind of flux.
Yeah. Yeah, once a year.
Um,
So you kind of need to really maybe a wage system may not be the best thing for you. It might be
Yeah.
getting the money in, putting a percentage of that away for your tax bill and seeing what you've got left.
Until hopefully
Then
3
you-
years down the
yeah.
track, you've got your
Yeah.
stable, and then you
Absolutely.
adjust. Yeah.
From my experience, the first year in business is the hardest because you're finding your feet, you're learning the ropes, you're figuring out what you are good at. Because you go into business because you're good at something, you really want to do this particular thing. You may not be great at accounting or bookkeeping or looking after receipts or marketing or advertising. So that first year of business, you're figuring out what you are good at. And I encourage you to figure that out quickly, because if you can't figure out what you're good at, the business could fail in year 2. Because some people get so caught up with trying to do the bookkeeping, well then they'll let that slide. So they won't keep up with their taxes, or they won't do anything, or they'll forget about that they have to market their business and tell people they're out there. So find out quickly what you enjoy doing in your business, what you don't enjoy, and then farm off the stuff that you don't enjoy. Now I have people saying to me, oh, but I don't want to pay anyone to do that. I keep saying to them, well, are you going to do it? Do you enjoy doing it? Because once you pay someone to do it, you don't have to think about it, it's done. Yes, you've got to pay them to do it, but you've actually freed up hours of your time to work on the stuff you enjoy doing, which could be going to get clients, it could be networking with people, it could be marketing, it could be you just like doing the bookkeeping, you're going to get somebody else to go and do all the selling for you. Figure out what you like and work with that.
One, you might have been coming to us anyway, but business loans.
Yep, so interest. Yep.
Interest.
Interest is tax deductible.
And in regards loaning against your mortgage.
Yeah, that's fine. So if you are business, the business can borrow the money. So if it's a limited company, separate person.
So it has to be limited
No,
for this?
no, I'll explain. So you've got a couple of options here. So if you've got a limited company and the company's going to borrow the money, that's fine. All the interest is tax deductible or claimable as an expense. If you are the people that own the company or just a sole trader or the person borrowing the money and you use it in the business, the interest relating to that loan is still tax deductible. What I'm saying is it doesn't have to be in the business name. The issue is, what is the money used for? If it's used on the business, then the interest is the cost of borrowing that money, and that interest is tax deductible. So if you have a mortgage, so you're claiming some of your mortgage interest against your home office calculation, but then you borrow another 50 grand because you're going to do your beekeeping at home and you need to buy, I don't know if that's the correct amount of money, but anyway, I'm just going to put that out there. $50,000 against your property specifically for the business, but you've used it against your property for the cheaper home loan rates. I'm looking at the banker behind you. And that still is tax deductible. The interest on that particular loan is still tax deductible. So you still claim it here. It doesn't come under the home office part. Does that help explain that?
Enough. Yeah,
Enough?
for now.
Enough, okay.
If you're an employee of your company, is it possible to protect your assets from the likes of IRD or anyone else?
The only way that you can protect your personal assets is a trust.
So could you put if you're borrowed against your business in your mortgage, can you still do it?
No, because if you're a company and you're a director and shareholder of your company, and the company needs to borrow the money to run the business, the bank is going to want a personal guarantee. Am I right, banker? Yes. So it doesn't matter what entity owns the home in that case, you have guaranteed to pay back that amount of money.
Okay, so that amount of money, but let's say for instance my capital might be worth 5 times that through my mortgage.
I'm going to ask the banker, would it just be over the amount of that they've borrowed?
No.
No, okay.
Well, I mean, you can do it for a specific amount or all obligations, but you'd find that most banks would want to do it all obligations, because then it means that in another 6 months you want to borrow some more.
Yeah.
You're not having to reinvent the wheel.
Yeah. There you go.
Thanks.
But a trust, like a family trust or a trust structure, is the only way to protect your personal assets from your business. So if you have a home and you're running your business, you might want to put your home into a trust.
Is there any downside to doing
you don't own it anymore, your trust does.
So you can't loan against it.
You can, you just have to do resolutions and things like that with the trustees, which you are, agreeing to lend to the company, which you own, some money, which is fine. And also depends if your children will like you when you get older, because if the children go, oh, they've got a trust and now I'm a beneficiary and I own that property, they might kick you out. I'm not saying they will, but that's just something to be aware of. But a trust is the only way to safeguard it. It's why in the 80s, I think, when a lot of companies went under and the directors were driving around in their big flash cars and owned their boats and they had their big flash houses on the waterfront.
So
Couldn't be touched.
No reason to not put it in a trust, really, apart from, I guess, initial setup costs.
Yeah, you're
And-
talking
and
probably a couple of thousand. with a lawyer.
Dubious offspring.
Yeah. Just don't tell them.
Yeah.
I've only seen one instance of that when the children got a bit nasty and they realised they had a trust and then they got upset that the parents weren't using the property well enough and was borrowing against it for their business, and the children got up in arms about it and sued their parents for that. Only one instance, I've seen that.
Well, this is only 7 months old, so he won't understand if we tell him anyway.
Yeah, for now.
Yeah.
18 years. Yep. Okay. There are so many expenses to go through. So you can kind of see where this conversation is going, that it is strictly in relation to your particular business. I'm going to put another one here called stationery. So you need stationery for your business. Business cards. You might need letterhead if you're writing notes, sending out letters. You'll need stamps if you're posting. So stationery is a business expense. Paper clips.
This is not a percentage
Pens.
thing, it's a...
It's not a percentage thing. Pens.
It could be, but it's not.
No. My son, who's 6, loves pens and raids my pens at work many a time. Unfortunately. Then I find them under his bed and bring them back to the office. So yeah, stationery is fine. But in this day and age with technology, and not a lot of people are posting things anymore. So, you know, stationery is coming down in cost, as a cost item now, because we're emailing more.
So on that, software expenses for computing.
Yeah, software, absolutely.
Even things like virus, you know, internet.
Virus protection, yeah.
Protection.
Yeah, anything that protects your computer. So if you're buying a software package and it's costing you an upfront fee, that is not an expense unless it's under $500. So there's a limit for what we call an asset versus repairs, or asset versus an expense. So if you bought an accounting package and it was $520, it becomes an asset of the business, and only a portion of that each year gets claimed as an expense, and that portion is called depreciation. So that goes for vehicles.
How would an accounting program depreciate?
The
Trust
accountant gets
me.
older.
Accounting programs depreciate.
So it's because they become obsolete as they get updated, like
Correct.
with my old as well.
Yes.
Yeah.
Yeah. So technology moves so fast. You shouldn't be paying an upfront fee for an accounting program. You just pay a
Monthly.
monthly fee to Xero, which I quite like Xero. I'm going to talk a little bit about that later. But that's an online fee and it's a monthly fee, and everything gets updated for you automatically. No need for virus protection, that's in the cloud. I mean, if the internet goes down, we're all screwed. Really, because nothing will work.
So if you were buying a new laptop
Yes, that would
and
be
then
an
buying
asset.
a new office or whatever to put on, you just do it all as one
Yeah,
one
absolutely.
shopping purchase
Yes,
and
yep, you would.
depreciate the lot.
Yep, I think it's 60% per year you get back as an expense on computer items, computerised items, including iPads and phones and things.
So sorry, I don't quite understand what is the difference between, I understand the cut-off, the monetary cut-off, but what's the difference between an asset and an expense? How does it work when you're...
An asset should last longer than 12 months.
Oh, okay.
Yep, that's the proper definition of an asset.
Right.
Should have a useful life for longer than 12 months.
Okay.
So a computer can be an asset.
Yes, yes. Computers last about 3 years.
So computer it can be claimed up to 100%.
No, just the depreciation. So we write a percentage off that computer each year. So
Okay.
they call it depreciation as the bit that you write off each year. I'm just going to abbreviate that because it's a long word. So we'll just call that depreciation. So for a computer, we're talking, I think it's 60 or 70% per year of that value will be depreciated, will be the cost that you can claim.
Okay, so you mean instead of 100%,
Yeah.
you can claim back 60 or 70%?
Yes.
Ah, right.
Yeah.
Okay.
Yeah. So that's for any assets that are over $500 in value.
Is it worthwhile if you wanted to claim majority of these expenses back? Is it worthwhile holding on to them to pay them out in one hit as opposed to claiming them back every return?
You probably need to claim them back every return.
Okay.
Yeah. Did you have a question?
Yeah, so programs that we use are horribly expensive.
Yeah.
So that, you know, 2.5 to 3 grand that you would need to spend every 12 to 15 months to keep the software up.
If it's within 12 months, that's a complete expense. If you have to update your software every 12 months, it's not an asset. That's the expense.
Regardless of the cost.
Yep, regardless of the cost. It's actually a maintenance issue. Hmm. Yeah. Does everyone understand that 500 threshold? Yeah. Sorry?
Depreciation, like you'll do that on a vehicle.
Yeah.
At the point that you then sell that vehicle,
Yep.
you've got a bunch of tax to
Maybe.
pay.
So what happens is you have the value of the vehicle and you've been claiming a percentage of that cost of that vehicle each year as depreciation. And at the end of each financial year, you'll have a value of that vehicle and it will depreciate, it will decrease over time.
Mm.
So then when you sell that vehicle, if you sell that vehicle for more than what we call the book value or the final value at that particular time, you will have to pay tax on some of the depreciation you have claimed over the years.
Yeah, so
Depends on what the value is. If you sell the vehicle for more than you bought it for, then you claim back, you have to pay tax on all of the depreciation you have claimed over the years. But anything above the cost price is what we call capital profit and not taxed. At this point in time, there's no capital gains tax in New Zealand.
right, that'd be a pretty rare kind of instance. Though.
It depends if you've got a nice old car, a classic car, it might appreciate in value.
But there wouldn't be that many
No.
things that you would be claiming depreciation on and then able to
Sell for more than you.
for more than
Yeah, no, there wouldn't be. Yeah.
So is there any pushback from IRD if you were claiming for, say, and it might be a start-up business, so you're claiming for, say, a laptop, an iPad, a smartphone?
It's fine.
you're
And this
claiming the whole lot?
technology, in this day and age of technology, you need a laptop, you need an iPhone, you need an iPad, you need all those items.
Yeah.
Because if you don't have them, you can't do your business on the move. You'd be better off taking an iPad to see a customer about their event than getting your laptop over. And I know that sounds silly, but the iPad's just so much easier.
No, I get it. It is.
And you have your smartphone because you use your smartphone as your hotspot for your iPad if you have to use internet use while you're there seeing the person. So you do. You need them all. There's no issue.
The computing side of things, your software and things like that, is that like your actual computers and iPads and things? Is that a percentage again if it's also going to be used at home, or would you just likely be charging 100%?
I'd put it through. I mean, if you've got a computer and it is used 50% business and 50% personal, I would only claim 50% of the depreciation claim through. Yeah, but the iPad, I'd say there's business, yeah. Because I use an iPad here all the time. I've got a laptop as well, and I've got my smartphone. I'm using that. I buy apps off iTunes, and I claim those because they relate to my business. I've got an Office app, so I can do Word processing and Excel spreadsheets on my iPad. And just, yeah, different apps. Like I was saying, there's that motor vehicle logbook app you can get now. Yeah. That could be quite good for your print media, you know, buying, you could store up a lot of books on your iPad.
Ah.
So you could do your subscriptions that way.
I just have some of my counselling clients I do via Skype, so any costs associated through Skype.
Absolutely. Claimable. No issue at all.
Cool.
Every business now can be global. You can do business anywhere. Maybe not Korea yet. Sorry.
Some places you just
I
don't
don't
want to
know,
go.
the bee man probably can't either. Your bees might go global, but you might not be able to follow them.
Might be able to have.
You'd be quite surprised by we send New Zealand bees. So.
Yeah. Well, that's right. You could have a global business if you were
Oh,
exporting
well,
your
all
bees.
the bees dying in North America.
There's a market there.
Oh, people would do it.
Hmm.
Absolutely.
Absolutely. Yeah. Export the honey.
Mm.
So there's a market there too. You could do, can you do a celebrant service through Skype?
Yep.
Here we go.
Funeral homes have it set up now, but I mean, I could do one at home through one. It's like the only one I couldn't do would be a wedding.
Okay, because you have to witness stuff,
Yeah.
but that's something to think about.
You
Well, I could actually
you
do one and
that
have
on
another
a cruise
witness
ship
there.
or something, yeah?
Sorry, on a cruise ship, yeah.
On a cruise ship or something.
Yeah.
I'd
There's
better be there, wouldn't
I
you?
can just see, I can see your travel costs getting a bit
I
higher.
can too, they were mounting up already.
Yeah.
They're no longer just a Christchurch and Geraldine.
No, no, no.
Maybe we're going to go as far as Auckland now.
Hey, so this course in theory would be tax deductible then if,
Oh,
if we're getting our business
absolutely.
into
Of course it
next
is.
year?
Of course it's tax deductible. I am a completely tax deductible expense, just so you know. Don't know if that's a great selling point, but I am. Does anybody have any other expenses that they wanted to discuss?
As I come up with some things sort of further down the track, thinking about every time I spend any money, I'll try and stop and think about this. Is it okay to email and just say, just not
Absolutely.
sure about this?
Yeah.
Would this be okay to
Yeah.
claim?
Yeah, just don't email me on your smartphone in the shop waiting for me to reply to you at the same time in case you're pondering over this purchase. Oh,
Sure,
she's
why
got
not?
it. Or Skype me somewhere.
Okay.
Yeah,
Yeah.
but of course you can.
Okay.
Yeah, yeah. If you have to buy things from overseas for your business, that's, I mean, tax deductible, there's no issue there. You just have to claim it as the New Zealand dollar amount. If you're a GST registered and you're travelling overseas for business or you're buying things from overseas for business, there may not be, there's no GST to claim on the travel, just so you're aware that travelling out of the country does not have GST on it. Buying goods from overseas, if it's not over the threshold for customs to get involved, there won't be any GST to claim. If you get charged Australian GST, you can't claim it in New Zealand.
When you talk about this happening, like for training and things like that, within the year, is it within the financial year?
Yeah,
Within
the
okay.
financial year.
Yeah.
So I'm talking a standard financial year, which is April to March, but I'm not too sure if you have a different financial year with beekeeping.
You could choose whichever financial year you want, that's correct.
Yeah. No, you can't actually. IRD used to let you claim whatever financial year you wanted, but people used to change their minds each year because they would shift income around.
Ah.
So IRD have got a standard now. Unless your business fits within their standard descriptions for an alternate financial year, you cannot change it. It must be March.
Hmm.
So I wasn't sure if you had a specific...
Beekeeping, I think you can.
Yeah, good. Yeah, well you would because of the influx of income in a certain period of time. Yeah.
So Alison, I've got mortgage interest up there, but other bank fees, like
Oh,
a fee, credit card
absolutely.
fee, overdraft fee.
Yes.
Yep.
Bank fees. Absolutely.
Bank fees only on the business account part of it.
Yes. And there's some really cool features out there if you're in business now. If you want to accept payments from customers while you're out and about, you can get, I've got an app on my phone which allows me to accept credit card payments on the spot. So if I'm visiting a customer and they want to pay me straight away, I just can put their credit card number onto my app on the phone and it goes into my bank account. You don't need a ZipZap machine.
Wow.
Yeah, that's cool.
What's that app called, sorry?
It's an ANZ app.
Fast
Fast
Oh, okay.
Pay. It's very good. Haven't had to use it yet, but I just like the fact that it's there.
Yeah.
Yeah. But the other banks have got things that you attach to your phone, so you can just put a credit card in and everything else. So you can get paid quite easily. There's more options for being paid these days than there used to be. Xero has online invoicing, so when you invoice somebody from your Xero, the accounting software I'll go on about next time, you activate that and people can use a credit card to pay you through online invoicing. The money goes into your account, but you don't actually have to be personally set up for credit card payments. Yeah. So that's another good feature. Refunds, like tax refunds, come out reasonably quick. Yep. GST refunds come out quick unless they think it's quite a high amount that you're getting refunded. Then they'll want to check it.
Is it the sort of thing like Lisa's talking about editing sort of work?
Yeah.
I'm talking about beekeeping. There's
Yeah.
not a lot of logical crossover, but would it be the sort of thing where you would still be better to have that as under one business umbrella?
Absolutely.
Yeah.
Depends if you wanted to sell one of those businesses off later. It depends on your long-term goals. If you wanted to sell them individually, then I'd suggest a separate structure for each, because it can be quite hard to differentiate the expenses, because there'll be some expenses that'll be very similar or the same for both of your businesses.
But it wouldn't be, well, this model probably wouldn't be that difficult to separate it at a certain point anyway,
Yeah.
would it?
No.
In which case it wouldn't be a big issue.
No, you could just have one company. If you've got a limited company, you can run as many business activities under that as you want.
Yeah.
No
I was just
problem.
thinking from the expenses point of view,
Yeah.
it probably broadens your scope a little bit.
It does, absolutely.
Oh.
I saw it.
You
in
too
the
can now have
Ah.
long shirts.
Let's see who's going with that.
And your
Winter is
makeup can
coming.
be included.
Cool. So that's pretty much where I'm going to leave it tonight. So you've all got your homework. I'm going to check with you next week to see if you've gone shopping. Did you think about your purchase at the time? Which EFTPOS card did you use? Was it the business or the personal?
Some of these things, like as an employee, protective clothing, like long sleeve shirts, is that currently, like, can I put that in a tax refund, personal tax refund, or is that?
As an employee?
Well, just any old.
No,
shirt,
if you're just an employee on
Yeah.
wages only, you can't claim anything.
You can't claim anything, no.
No. If you're on withholding tax income, which is a different, you consider self-employed, but your tax is deducted as you go, so real estate agents have that, reformers have that, then you can claim expenses in your tax return to offset that, so that's fine. But normal PAYE wages, no,
Yeah.
can't claim anything.
No, you'd have to be a private contractor
Yeah.
or some such. Yeah.
Absolutely. Yeah. Cool.
Good to know.
Thank you all, and
Thank
we'll
you.
see you next week.